So we're going to start with the Canada Emergency Wage Subsidy. This is probably the most hot topic right now because it's so recent, and really the legislation's not even out yet. So we're doing this based on comments from the Prime Minister and Morneau and different various finance releases. So we're going to talk about here, and then I'm just going to go through and start talking about each one. Eligible employers for the CEWS, I'm going to call it for today. I don't know if that's the right pronounced, but that's what I'm going to call it. So for businesses of any size, so this is kind of open to pretty much everybody except for public bodies, which would be your municipalities, your schools, your local governments, and hospitals. So NPOs, charities, and partnerships, again, that's only if the partners of the partnership are one of the other eligible employers. There is limitations, and the limitation really comes down to revenue and a drop in revenue. And the government released yesterday changes. Originally, it was the 30% compared to last year. Now for March, the period's going to be 15% drop in revenue year over year. And your claiming period would be anytime from now until April 11th, but the program's not open available yet to actually make a claim. So we'll have to wait for the government to open it up. You have two options essentially for your comparison for revenue. For March 2020, you can compare to March 2019, or you can compare to the average of January and February of 2020, which is a lot of people wanted, because for new startups or for people who just have had exponential growth over the last year, this kind of lets them also participate in the program. And then for April, it's either April 2020 or April 2019. For January and February, if you choose to use the average for January and February for March or April or one of them, you have to stick with it throughout the whole time. So you can't go flipping flopping. So you may want to look at March, April, and May earnings for last year and compare that to the average from January and February 2020 to make sure that you're not meeting it for March and then you don't get it for April and May. So that would be.
I'm just, because there's a lot of people saying they cannot hear right now, and I just want to, and so they can hear me. So I'm going to move you to being an attendee, and then I'm going to move you back to being a presenter and just see if this fixes things for us. Okay, hold on a sec here. Okay. So Jesse, you should be back with us now.
Can you hear me?
Yes. Can everybody else hear everything?
Test.
Okay, good, Jesse. Yes, you're good to go. Okay.
All right. So really just in summary, for this slide, you're going to compare your revenues to prior year of the same period or January and February of 2020 and use the average of those 2 months. Once you pick one, you have to stick with it. You can't go back and forth. And yesterday, the government announced that the 15% drop is for March, and then 30% for April and June, or May, sorry. Employers are going to have to attest to this fact, and you got to maintain your documentation to support it. So what is the eligible employees? They've also highlighted what this is going to be, and they've changed this. Originally, it was you could not claim it for an employee who has claimed the CERB, which we'll talk about later, but now it's will be limited to employees that have not been without remuneration for more than 14 days in the periods that you're asking for. This is just a slight change, but again, it's if your employees have always been employed, then you're going to be okay. The next. So you're calculating your revenues. When you're calculating your revenues, you're going to do it based on business carried on in Canada, and it only counts for revenue from arm's length sources. So if you have related companies or associated companies that you've got payments going through, you exclude those amounts. Originally, they said normal accounting methods that you chose all the time. Yesterday, they announced that you now have the option to choose accrual or cash method. But once you choose one, you got to stick with it. You can't go back and forth. So again, look at all 3 months, not just one at a time. And then the NPO charities have the option to either include or exclude the government funding in their calculations. What's excluded from the revenue would be extraordinary items or amounts on account of capital, so capital gain on an asset sold last year. And the wage subsidy itself is not included. So the actual amount of the subsidy it's kind of a complicated, looks like a complicated calculation, but really it's the greater of A and B. A is 75% of the amount that was paid, up to a maximum of $847. And the lesser of either the amount paid or the 75% of the pre-crisis weekly remuneration. So what this means is that you could be paying them less than 75% of their pre-crisis remuneration, but at the end of the day, you might end up getting the full benefit for the pay. An employee, there's a special rule for non-arm's length employees. Obviously, you can't just start increasing. They've tried to stop people from just increasing related party wages after this to take advantage of the subsidy. So it's limited to 75% of your pre-crisis weekly remuneration. Again, there's no draft legislation out right now or final legislation. But obviously, the questions have come to me about whether or not they had to be paid weekly. And my answer would be probably not. It's going to be based on a 52-week year, and you would pay them limited to that amount. So our example, if you're paying $250 a week before, your benefit's going to be limited to $187. Next slide. I don't know if it's lagging for everybody else.
Yeah, and we can actually answer a question here at this point. So Wesley asked, do you have to pay the additional 25%, or can you reduce employees' salary if you cannot afford it and want to keep it?
I'll get to that in a minute, and we'll cover that on a slide in a couple seconds. So the pre-crisis remuneration, like I said, it's going to be defined once we get some more legislation on this, but I'm guessing they're going to kind of use an average for the year, not what you paid actually the week before the crisis happened. The subsidy will be eligible for new employees. You just don't have the comparison to the pre-crisis wage summary. So it's always going to be 75% up to the limit of $847. And there's also no limit. So the other wage subsidy that we're going to talk about in a second is much smaller, and there's an actual cap on it. For this one, there's actually no limit overall. So if you have 100 employees and you're paying $847, you can get $84,000 a week as the wage subsidy. Employers, so this is the answer to the question really, is the government has said they don't have to pay the additional 25%. But they are trying to encourage employers to pay it if they can feasibly do it. So presumably if they're getting the credit, hopefully they're being able to get some financing, which again, we'll talk about in a couple slides, to support paying these salaries when there's no revenue, maybe not very much revenue coming in. So the answer is no, you don't necessarily have to, but they would like you to. Another thing announced yesterday by the government was that they're also going to introduce 100% refund for certain employer paid contributions. For Ontario, that's mostly just your EI and your CPP. So that's your employer portion of those payments. You're going to pay them. And then when you do your submission for your credit or your subsidy, you'll add those on to the subsidy amount for how much for the wage calculation. There's no limit on that, but it's going to be limited based on the calculation of your CPP and EI. And this really only relates to employees that are on paid leave and they're not working at all. So if the employees are coming in for a few hours a week or anything, from what it looks like, again, no legislation, you won't get the credit. But if they're at home and you're just paying them to sit at home, then you would get a full credit for your EI and your CPP on the full amount. Next slide. Sorry. So how do you apply? So the government has announced that there's going to be two ways to apply, is the way I've read it. It's either going to be through your My Business account or through a web application, which is not ready yet. And they're saying 3 to 6 weeks until the application is actually ready to be done and used. My suggestion, again, the pro tip, you got to make sure you have your direct deposit set up for your business, so that way you get your money as fast as you can. If it's anything like the CERB, it should be within 3 business days. Whereas if you take a check, it's going to be more like probably 10 business days, depending on the mailing system. There's going to be more details coming through, but that's what we have for now. If you don't have a My Business account, my suggestion would be to register as soon as you can, because I think if you don't have to rely on this new web-based application being done in the next 3 to 6 weeks, I would choose that one. And the My Business account is just a good thing to have afterwards as well. So making sure you're in compliance with it. So again, the government has been very blunt in saying, like, people better qualify if they are claiming this credit. So you want to make sure you document your decrease in revenue, and whether or not that's on a cash basis or accrual basis, you got to make sure you document that you've done this both every single month. You've chose the same option and the comparison period. There's also discussion in Morneau's announcement that he said you're going to designate a person. I can't find anything in Finance's release on this. And Morneau also said that there'll be significant penalties up to 225% of the subsidy and up to 5 years in prison. So if you're manipulating your revenues to fall into these subsidies, I would just be very cautious. I will say that the Ministry of Finance release on their website says it'll be a 25% penalty and the repayment of the subsidy. So that would be 125 to me. So the other 100%, it could come as a result of another penalty released after the fact, but that's still to be determined. We'll know more once the legislation comes out. And there's other, like, the interaction with the CEWS and the other wage subsidies and the benefits that we're going to talk about next. Employers can be eligible for both the temporary business wage subsidy, which is the 10%, I'm going to talk about in a sec. And our suggestion is to just, if you're it's more, it's a smaller credit, but you actually have more people eligible for it if you're a CCPC, and we'll go on to that. But anyways, you claim the 10%, and if you received anything, you would just reduce your claim for the CEWS subsidy when you make your submission. The Canadian Emergency Response Benefit, if you don't qualify for the CEWS, you can still lay off employees and they would receive the CERB, which again we'll talk about in the future slides. And then the last one is the work sharing program. They announced yesterday, I believe, that for employers and employees that are participating in the work sharing program, which again we'll talk about in a minute, the EI benefits received by those employees through this program will reduce the benefit that the employer is entitled to receive. So you've got to be careful. If you're using both of these, make sure you're not double dipping, is what they're asking. And in the government assistance, so it relates to corporations or companies that are receiving other federal credits. The most prevalent one would be the shred. Any government assistance you receive for wages that are eligible for shred, you need to reduce those wages by this subsidy you're getting, in which will reduce your shred claim. The other one would be the apprenticeship tax credit is the other one that comes to my mind. And the wage subsidy itself is taxable, but really it's just offsetting the payroll expense anyway, so it's going to be a net probably. So there's a few things. The revenue test, so the option did come out yesterday, so this was in our slide, but there is going to be more guidance, I'm sure, coming through in terms of that. For MPOs, you get to choose between the revenue test, and again, we're guessing more guidance is going to come out when the legislation comes. There is nothing still, from what we can tell, about the dividends for the only remuneration. If you only were receiving dividends, you're not going to have the payroll account probably for the $50,000 credit, or in order to claim the 75%. Sorry, so we're suggesting you would just apply for the CERB instead. And again, sole proprietors with no employees, you're going to have to go with CERB. I know I've been asked a couple times now too. Subcontractors, they're not employees because they're not going to be reported on the T4. So their wages wouldn't count. And again, some of the stuff is just based off of announcements, and we don't have draft legislation yet. The next one, temporary wage subsidy. This one's been out for a while, so I'm going to go quickly over this as it's much smaller. But you might be able to get into this one if you can't get into the CEWS. So this is for individuals, CCPCs, and partnerships who are one of the other, and MPOs and charities. So charities and MPOs, again, same thing with any individual. It's 10% of your amount. For CCPCs, what they did announce is that the CCPCs must have a small business deduction limit greater than nil for the last taxation year that ended before the eligible period. So what that means is if you've got associated group and you're a bunch of CCPCs, you have to ask your accountant or watch out to make sure that at least $1 of small business deduction has been allocated to the employer in question. Otherwise, from what we're reading, you're not going to qualify. So if you haven't filed your last tax return yet, I would suggest making sure that gets changed and done. If you have, you can talk to your accountant about what options you have. The amount of subsidy. So it's 10% of the remuneration paid from March 18th, 2020 to June 19th. This is 10% of what's paid, not what was earned. So the first payroll, I think that's going to be coming through on April 15th for March. That would be eligible. You're limited to 1,375 person and a maximum of $25,000 for the employer. One thing that we didn't expect was that associated CCPCs don't have to share the maximum. So if you have an associated group with employees in each one, you'll be able to get the subsidy for each credit or for each company. Again, like I said before, just continue to calculate it, even if you're eligible for the CEWS, because if for some reason you don't end up being at the end of the month, you can still get this and you just reduce your CEWS subsidy. Again, calculating it's 10%, and when you do your payroll, so it's 10% of what you paid your employees, subject to the limitations. And what you do is reduce your actual remittance that you're paying to the government, but you can only reduce your federal income tax or your provincial income tax on the amounts paid. So you can't reduce your CPP and your EI requirements. It's just the tax requirements. So if you don't have a full submission for income tax, you can carry the credits forward for periods even after this June 19th date to claim it afterwards once you do. One question that I know have come up is the employees will still be able to claim the full income tax withheld on their T1 when they do their tax return. One thing you would like to do likely is if you do have a payroll provider, make sure that you've opted in if you're eligible for it, because they need to know. And I'm assuming they've been in contact, but you have to know. Again, books and records, make sure you keep very good records of this to track it. And one thing that Tax Templates has produced a very good schedule, which allows you to calculate what the wage subsidy is. It incorporates the limits, and it has instructional videos even on it as well. Tax Templates does a lot of great schedules, so we suggest downloading that one. And the wage subsidy, again, it's taxable, and again, it's going to reduce your credits. Another suggestion is to just keep a separate GL account so you know how much you actually receive for this, so you don't go over the limits, and you know how to pick it up for when you're doing shred or other applications. And the last thing I think I'm going to talk about is the Canada Summer Jobs Program, which again just came out yesterday. The program's been around forever, but they've actually increased what you can get. So it's for summer work for experience for young people, ages 15 to 30, and they're going to cover 100% up to the provincial minimum wage. Again, there's no legislation on this yet, but I'm assuming that's going to be the student minimum wage, because I know if they're under the age of 18, I believe it is. If they're over, then you're not subject to that amount, but just be careful you're not trying to claim more than whatever the minimum wage is for those students. And the other thing that changed was that they've extended the program to February 28th, 2021. And again, we're expecting a little bit more information, hopefully today or this weekend, on these changes. And that's the questions. So
yep, I'll jump in here. So thank you everybody who's asked quite a few questions. I just want to be, cognizant of time as well. It is 11:30 right now, and we are comfortable going beyond the 12 o'clock timeline. Just want to let everybody know that we will get to as many questions as possible. So Jesse, one of the questions that came through here was around seasonal businesses that have not had any sales through the winter, but keeps their staff on during that time. But now the contracts are starting to come in. So they're just starting to see a ramp up in revenue. Will they qualify for that wage subsidy?
Well, in that case, you wouldn't compare your wage, your revenue test to the March or the January and February average. You would compare it to last year. So if you're experiencing a large drop compared to March or April, May of last year, because people can't get out, then you would qualify, provided you meet the other tests. But yeah.
Okay. A second question here, and I think you actually touched on a piece of this later on, but let's just say an organization that has multiple streams of income. In this case, somebody's saying that they've lost their revenue down the silo of childcare, but there's other things, maybe online tutoring or something like that, where they haven't necessarily lost revenue. Will they still have access to the wage subsidy funding for the portion where they have lost the revenue, or does it have to be inclusive?
Good question. I think we're going to rely on legislation. So I'm assuming if you've got, would be a corporation or maybe even a self-employed person with multiple avenues of multiple businesses. So I think at the end of the day, you would look at the business, but I think we're going to have to rely on just waiting for legislation for that to come out. So we'll release something when we get more.
Yeah, for that piece that you talked about around the 10% deduction off payroll, was that as something that, if the business does have multiple silos, that it can be applied, the $25 max can be applied to the different pieces of the business? Or is that
10% is not subject to a revenue test? So yes, that one would be okay for really anybody that's continuing to employ. Obviously, if you're a CCPC or one of the other eligible employers.
And I'm just going to keep going through some questions. I'm trying to get them somewhat in a stream, but they're all over the map, which is great. Do you have to deduct what we're claiming on the TWSE?
The TWS.
Yeah, I know. I wasn't.
Yeah, I think that question is probably referring to the fact that you can't double up in the program. So if you claim the 10% TWS, you have to deduct that when you apply for the 75% CEWS subsidy.
That's why we suggest to just claim the 10%, and then when you go to do the 75% subsidy, if you qualify for both, then you would just reduce your 75% subsidy by that 10% you already claimed.
Okay, great. And Wanda asked the question here too about this. She does quarterly remittance. So now the first one coming up is April 15th. So she can use that 10% method for the whole quarter, or is it just over a certain period of time?
The way it's been written is for remuneration for the amounts paid to the government. So I would say yes.
Okay. So are businesses able to apply for the CEWS if the employees are not working their regular full-time hours?
Yes, if you're still paying your employees, to some of our clients and businesses are actually still continuing to pay your employees just to sit at home, just so they don't have to go on EI. In that situation, like I said, you would get your CPP and EI covered, it looks like, as well, based on the releases from yesterday. So yes, you would.
Okay, great. So there's a question here about the CERB and about, a business owner having a trailer park where they collect their income over the summer months. But they generally, they take the three owners take a salary from the company. So they don't know if they can open this summer. So would they be looking more at the CERB route?
If you're going to continue, if you're not going to pay the employees, then you wouldn't.
Yeah, it sounds like there's three people who kind of run the trailer park together, and they all can't. They're not going to open the trailer park this season, so there won't be any revenue, and obviously then very few employer hours or no revenue coming in. So it sounds like the route would be the CERB.
Well, they would if they can't pay themselves, so they can still continue. They've had to close because of COVID because they're not going to be able to open, so they would again be limited to the 75% of the pre-crisis wages for those for the employers, because assuming they're going to be related or not, they're going to be non-arm's length people.
I'll just add to that. So in that case, they could sort of choose between the two programs. They could continue on payroll if they're able, and then be eligible for the 75% credit. Or if they're going to, they have no business and they're going to come off payroll, then they can go on the CERB 2,000 a month benefit, which we'll talk about in a few minutes. And we're also going to talk about some financing options that would allow them to bridge the gap if they wanted to stay on payroll and be eligible for the 75% benefit.
Okay, perfect. I'm scrolling through these questions, and for those who cannot hear certain people, if you're on your phones watching, you might have to click on each person's camera to have that come through. And just so everybody knows, the soft copy with the audio video will be available after as well, for those who are not able to be listening right now. So when they're calculating remuneration, is it a before tax or an after tax, like a gross or net revenue conversation?
Gross payroll.
Okay. And do students need to be registered with a federal program for the employer to be eligible for the 100% student subsidy? Again,
I'm gonna.
So I can answer that, Kyle. They've said that you don't have to. They don't have to be students. So if they're asking if they have to be registered in school, no, it's for youth. They're saying it's just for any youth that meet that requirement of age 15 to 30.
Okay, fantastic, thanks. And there's a question here about people who were just happened to be laid off before all of this started. If they were laid off, will they be excluded until the company brings them back on, or will there be some sort of back pay opportunity?
If we're talking about the CEWS, it's actually employers have to pay them, so they won't get it if they've been off for the 14 days. And I think in order to get the CERB, as Laura's going to talk about, you have to be expected to be off for the 14 days to get that. So that's kind of where they're catching you. So if you're not going to be off for 14 days, employers can't claim the CEWS for that employee.
Okay.
And if you're not off for the 14 days, you don't get the CERB. So,
Natasha, we're going to cover financing later on. If you wait till that time, please ask this question at this point to see if anything else that you picked up throughout this. And just because I'm scrolling through here. I think you guys, I don't want to ask the same questions twice, because a question here again about applying for this the CEWS if employees have reduced hours from 35 down to 16 hours a week. So obviously their wages are down, but can they apply?
Well, the employers are the ones that are going to have the 30% drop in the revenue in order to be able to, so employees don't apply. And if this is in reference to the CERB, well, I'll let Laura talk about that when we get to the CERB itself.
Yeah, of course. And just maybe a quick question here. So a company that chooses who's been currently using accrual basis accounting but wants to switch to cash basis accounting, they can just make this month over month switch. Do they have, like, they're going to have to go back through all their accounting record over the previous 12 months, correct?
Correct.
Yeah.
And this is, again, just for the subsidy for actually doing your income tax. Yeah, they're not going to let you change to a cash basis unless you're a farm, is really the only one that's allowed. So again, this is just for calculating the wage subsidy revenue drop.
This next question too, and there's so many different questions coming in, and there's so many different scenarios. So I apologize, we're not going to be able to get to every single one of these. And I think this is more a conversation of opinion, but it's about, if a dental office laying off most of their staff, and now is the purpose of the Q to kind of bring back the staff and pay them the wage subsidy while they stay at home working, or is that why the CERB is available?
That's what they're trying. I think the government, the purpose behind the Qs is to try and encourage employers to basically fund the EI so that we don't have that many people going on to the CERB. However, if I'm looking at that question, they've already started receiving the CERB. Then if they come back to work, I would say that they're going to have to repay the CERB.
Yeah, repay the CERB, and then they could potentially
and getting full pay or even any pay more than, again, 10 hours. We'll talk about it in a minute. You'll have to repay the CERB if you want to get the 75. If the employer wants to get the 75% credit.
Okay, and in regards to the students, do they have to go through the summer student program, or can they hire anybody under that age tomorrow?
I can answer that. So you have to go through the program, and there is an application for that. So that more information about that will be available online.
Okay, thank you. Yeah, and I'm going to keep on keeping on. I'm just going to get to as many as I can here. Linda, that's a great idea around the flow chart to try to follow all of these decisions. They're changing.
Yeah, I can actually respond to that as well. So at the very end of our slides, we do have a link to our additional resources through our Baker Tilly National Network, and there is quite a nice guide. It's not a flow chart, but very handy guide that kind of goes through the eligibility and who can apply, and it's fairly easy to follow. So I would recommend to check that out.
Great. And it gets updated as well basically every time a release comes through. Our national is pretty good about updating it, and when an update happens, the old one just gets removed and the new one's put in the same place. So if you're going back to if a release comes out, make sure you go back to the website and download the most recent version.